Good evening and welcome back to Sudden Wealth. Today I would like to explore a bit the what you need to do in order to succeed in the crypto market. Now, of course, this doesn't work for every coin, but this is some of the basics based on what happened in the past, but also taking into account the levels of volatility, the only thing that can work. So the first question, the most basic question is, who gets rich in crypto? Very simple. Founders of coins or exchanges and holders. That's it. And okay, maybe 2 or 3 traders out of millions also get wealthy. But the big majority is buyers and holders. It's buyers and holders and founders of coins and exchanges. Now, take a look at even if you're a successful trader, let's say you are one of a million who's actually a very successful trader. I'm talking about generational wealth here. I'm not talking about going from, 10K to 200K. I'm talking about going from 10K to 100 million or 10 million or 50 million. Now, let's see what happened with Bitcoin. Bitcoin went from 1 penny to $69,000. What about Ethereum? Went from 31 cents all the way to almost $5,000. Let's take the example of Bitcoin. From 1 penny to 69,000, that's a 6.9 million fold your money. That means if you put $1 in Bitcoin, at the peak of 2021, it was worth $6.9 million. Now, my question is, are you going to out-trade that? I really don't think so. Now, what about Ethereum? From 31 cents to almost $5,000, it's 13,000 times, 14,000 times your money. Are you going to out-trade that? Yeah, I also really don't think so. So the question becomes, who actually allows the holders to become wealthy? That's actually the traders. So the traders, by getting leveraged out, by getting liquidated over and over again, they pay the holders of coins. You get wealthy from holding successful projects with product market fit. That's it. There's no big secret. There's no big ecstatic, rules around, you need to buy here, you need to buy that. Look, there's a little bit of trading that you can make, but it's so limited that I wouldn't even call it trading, which is you research and you find the good projects. Then you buy them in the bear market or in the recovery year, which is where we are today. And then you start selling towards the end of the 4-year cycle, towards the end of the bull market. How do you know that the bull market is coming to an end? Simple. Jim Cramer is bullish. Pictures of monkeys are being sold for millions of dollars. Coins with a picture of dog, all of them are going through the roof at the same time. That's your top signal. When everybody's talking about crypto, you go to work, you hear people that never paid any attention to crypto are talking about it. You go to the hairdresser, and the hairdresser is talking about the crypto that they just bought that's gonna do 1,000x. You go on YouTube, and it's new channel after new channel after new channel of this coin is gonna 1,000x and 100x and 500x and 300. That's how you know the top is in or is about to come in very soon. That's where you start DCAing out. That's the maximum I would advise. I mean, not financial advice, of course. Do your own research, etc. But that's what I'm gonna do. So, but this sounds easier said than done. So, for example, there were people that bought Bitcoin at $30. And from $30, it went straight to $2. That's a 94% drop. Do you think that's easy to see your portfolio going down and down and down and down every day? Almost, or every week? See, that's not easy. Do you know, you keep buying a project over and over again, and it either goes down or doesn't move, doesn't go anywhere. Do you think that's easy? That feels wrong. That, that makes you, almost, your body almost aches every time you do it. But that's how to do it in order to succeed. Not buying something after it already went up 1,000%. So I'll give you this example. Let's say you have $10,000. Let's say you put it in a coin that went up 10x. And let's say it goes up another 10x. So that means from start to finish, it went up 100x. So if you had put $10,000, you got $1 million. But if you bought it after it 10x, you got $100,000. Now, is $100,000 good? Of course it is. It's very good. Is it generation wealth? No. Can you retire on it? No. Will you stop working? No. Can you take a lighter job? No. You just have an extra comfort in your life, but that's about it. What about if it goes up instead of 10x, it goes up 100x? Now, your 10,000 in the first scenario would be 10 million. In the second scenario, it would be 1 million. Is 1 million enough to retire? No. Can you have a very good life for a long time? Yes. Can you retire on 10 million? Well, if you're careful with your money, you can. So one is retirement money, the other one is a very good pillar for your life. Both of them are great, but they're different. What if you've accumulated $50,000 and then it goes up 100x? See what I mean? That's 5 million. Or if it goes up 1,000x, that's 50 million. So what I'm trying to say is you will feel well when you're buying after it already pumped, but it will not create generation wealth. Or at least it's much harder because you need to be very lucky. You need something that goes a further 1,000x on top of a previous 10x. I can count by my fingers how many projects did the 10,000x. I know Bitcoin, Ethereum, X, Pepe. So, but not many more. Yeah, even BNB hasn't done a 10,000x yet. So, what I'm trying to say is doing what feels wrong. It's actually the key to success. Doing what it feels right, which is buying after the green candles. That's easy. Maybe it goes up, 5% per day. That's very easy. But you need to see some of your coins going down 90% for you to survive that, and see it recover all the way back, and keep buying on the depression zone. That's the key, but that's very difficult. That's why only a few succeed. The holders succeed because with enough time passing, people that bought Bitcoin at $30 and went down to $2, they got really pissed. But what is $30 next to, at the moment, $30,000, right? So keep that in mind, guys, and don't fall for trading, and let alone, please don't fall for leverage trading. That's the easiest way for you to get completely annihilated, not only in crypto, in the stock market, with bonds, with commodities, whatever, but particularly in crypto. And why do you need to endure such volatility to the downside as well? Because crypto is the best asset class in the history of mankind, and the price you pay for it, it's called volatility. So that's it, guys, and I'll see you in the next one.